Good afternoon, everybody. Welcome to our last webinar for October. Today we're talking about understanding technical analysis, and we're specifically focusing on two indicators called on-balance volume and volume price trend. My name is Sean van den Berg. I head up client education at PSG Online. Welcome. I see there's a lot of regulars on our webinar again. So welcome, and there's a lot of new names. Guys, I hope you're going to enjoy this webinar today. Like we do with every webinar, remember this webinar is being recorded. So if you're on this, you'll be getting the PDF version of the PowerPoint presentation as well as the recording. The idea there is obviously for you to review it, and obviously from there to send me any questions you might have. Talking about questions, as we go along, just type in the questions in the box, as long as it's context related, I'll be able to answer it. I'll be answering most of the questions obviously at the end of the webinar, if time prevailing. Okay, so let's get started. I hope you guys can hear me clearly. If you can just type in the box quickly, in the question box, you can hear me clearly. I appreciate that. Sounds fine. Great. Thanks. That's a very fast answer. Great. Appreciate it. Okay, so here's my agenda for today. I'm going to do a quick overview of what is technical analysis, and obviously focusing from there more specifically on volume analysis, and from there chunking down to the two main indicators, and I've got some examples highlighting it for you. Okay, so let's get started. Those of you that are new to technical analysis, this is a quick overview. What is technical analysis? Bottom line, to make money on the stock market, we're talking about the two forms of analysis. I always say there's three questions you need to answer. You need to know, what must I buy? That forms part of fundamental analysis, and that's obviously, excuse me, looking at the bigger picture. How does the company operate within the economy? That's what we call macro fundamentals, and we're talking more specifically about the company, the nature of the business, and also obviously the financial statements. That's what we call micro fundamentals. So that all fits into what we call fundamental analysis. Today we're going to focus on technical analysis. That also question when to buy and when to sell. So obviously timing is your critical success factor. With the fundamental analysis, there are a lot of factors involved, be it the economy, the GDP growth, the inflation, interest rates, you name it, Ebola, all those kind of things can affect the economy. So what's important in this scenario with technical analysis, we're only looking at two factors, price and volume. And we're discussing it more in the next slide. Okay. So what is technical analysis? Everything we know or feel or think about the fundamentals of a company is reflected, number one, in the company's share price, and number two, very importantly, is a volume. And volume is obviously the number of shares traded. So it's people's commitment to price. That's what we're going to focus on today, is that volume. And price is determined by supply and demand. So if we've got more buyers than sellers pushing, you'll find that the price goes up. Obviously, demand exceeding supply, and when the price is falling, we have more supply, more sellers than buyers, or supply overcoming demand. So your goal as a technical analyst is to look at these past trends and help you predict future trends. And also, obviously, these trends also highlight certain patterns that get repeated. So that is, in a nutshell, what is technical analysis. Okay. So what is technical indicators? Those are those squiggly lines found above, below, and over the chart prices. Obviously, most of the indicators are based on closing prices, because that's the information that comes out of the market every day. The opening price, the closing price, the high for the day, the low for the day, and obviously the fifth bit of information is the number of shares traded or volume. So all these technical indicators are based on those five criteria, and all it is a mathematical formula that creates those indicators. But what are technical analysis? Technical indicators, technicals are used to predict future price levels. So it's a tool for you as a trader to help you determine direction of the share, okay, by looking past patterns, as I mentioned earlier. So technical analysis is mainly used by traders as opposed to investors that are looking more at the fundamentals. But the idea here is we want to analyze short-term price movements to help us anticipate which way the market's going to go. And you obviously want to take advantage of that. But saying that, long-term investors also use technical analysis. It's more for getting the entry and exit levels right by analyzing the long-term trend. So yeah, that's using more the moving averages and things like that to determine what is the primary trend. Are we in a bull market or a bear market? Okay. So why we use technical indicators? Three reasons mainly: to alert us, to confirm, and also to predict certain levels. So when it comes to alerting, obviously some indicators, especially when it comes to price action, we look at line charts, bar charts, or candlestick charts. It alerts us to do further investigation. So if momentum is slowing using various technical indicators, oscillators, it's an early signal to watch out for breakout below support level. If there's large bullish or positive divergence building, it may highlight a breakout above a resistance level. So it helps you as a tool to help anticipate where the market's going. Okay. It also helps you to confirm by using various indicators. For example, moving average crossovers help us confirm a breakout also. And also, we talk more specifically today, when the price breaks below a certain support level, you want to use a corresponding low on the on-balance volume indicator to confirm that weakness. And we'll talk about it more in the next slides. And obviously, some traders use technical indicators to help us predict the direction of future prices. Okay, so that's in a nutshell what is technical indicators. So let's talk about volume analysis. So before we get into volume analysis, I just want to have a quick poll here. If you guys can just quickly answer this to help me determine who's on the okay. So most of you would be using volume analysis in your. Okay, some of you are on. So we've got about a 60-30 or 60-40 split at this point in time. Okay, excellent. Gives you a bit of idea who's on the webinar. Okay, 60-40. Great. Thanks a lot. I appreciate that. Appreciate your participation there. Okay. Okay. Let's talk about volume analysis. What is volume analysis? All it is an examination of the number of shares traded over a given period of time, be it a daily chart, a weekly chart, monthly chart, wherever the case might be. But basically, it's the number of shares traded or bought and sold between buyers and sellers. So there's two ways to look at it. Either it's a measurement of activity, or it shows the worth of the current market move. Okay. So volume analysis is used as one of the many factors that helps you as a trader in your own trading decisions. I like using volume a lot because if you will talk about it a bit later, but volume leads price, number one. You want to pick up insider information or insider trading, people have access to privileged information, you'll pick it up on volume first. Okay, so the idea with volume analysis helps us analyze the trends in volume in conjunction with the price movements, and that helps us anticipate significant movements in price. That's where it's so powerful. Okay, so volume typically increases as price increases, and you'll see on the next slide I've got some visual aids that make it more easier for you to understand. So volume decreases as price falls, and obviously it usually increases as price goes up. So they should be moving up in tandem. However, saying that, if we have a serious price move on serious volume, like a volume spike, that tells me something serious is happening. Someone's got access to privileged information, or the market's reacting very positively to something. So it's a very credible sign of a trend reversal, and also could incite traders to buy or sell. So we're talking about volume spikes. When you look at it another way, a significant price decrease on low volume, however, could be considered as just a temporary uptick, okay, in a downtrend, and a lot of traders don't react to that. When the opposite occurs, obviously the price goes up and the volume's falling, or other way around, volume's increasing and price is falling. That's what we call divergence, and that's what you also want to take advantage of. And hopefully I'll show you some examples just now. Okay, so here we go. Let me bring my little cursor in here to describe what I'm talking about. So here we got more buyers and sellers pushing the market up. Okay, so the trend is up, and then we go through a consolidation phase, a sideways trend. Okay, this is where the market waits, with the buyers and sellers having a bit of a tug of war. It's we're indecisive. Okay, we're waiting for new information. If it's positive, like today, for example, everybody's waiting for what's happening with the Fed. Are they going to raise interest rates earlier than expected, or are they going to keep it lower for longer? But the market is quiet today ahead of that. And that's what contributes to this scenario. So you find that volume drops as market players move to the sidelines. Okay, and once they make announcements tonight, you'll find obviously the Dow or the American markets will move, and obviously our markets will follow from there this afternoon. Okay, or tomorrow morning rather. So that's in the sideways market, low volumes. Okay, indecisiveness, people move to the sideline, uncertainty. The market does not like uncertainty. Okay. You'll find also have low volumes when the prices have dropped. So the clever money's got out already. This is where the hairdresser and all her friends are still in the market. And eventually they can't handle the pain anymore, and they start getting out to the market. Okay. So at market bottoms, this is where I say the hairdressers and most private investors are getting out. It's the wrong time to be selling. Okay. At the top of the market, this is where you find high volumes. So you got a combination between the clever money or the smart money and the hairdressers getting in the market. In the market. Okay. So there's a lot of movement there. At the top of the market, we have what they call sometimes a blow off. This is the last phase of a strong bull market, and obviously the clever money is getting out, the dumb money is getting in, and you can see what happens from there. Okay. Going back to our previous slide here with market bottoms, the clever money starts getting in when the last of the hairdressers can't handle the pain anymore. So the big institutions come in as you see big volumes. And how do we know a change in trend? You start making higher highs and higher lows, trend reversal. Okay, so just understand there's some psychology behind it. Okay, let's move on to the next slide. So, yeah, I've tried to highlight for you. This is looking at the SA breweries. So the idea is you want to combine volume, which is usually displayed at the bottom of the screen in the form of a histogram. Okay. Use the volume histogram at the bottom and the price chart on top. So this is SA breweries, and I've got overlaid on top of this a 50-day moving average and a 200-day moving average. But the idea is by just looking at the histogram, okay, you can see there's a slight trend up there. You see, okay, volume's increasing. You want to combine that with the volume price. Okay, well, sorry, the price. The price is going up. Now you can see the volume is going down, and that coincides with this falling volume over here, and same over here. Okay, but just by looking at the histogram, it doesn't really tell you much about supply and demand. Remember, the main players on the South African market, the JSE, are the institutions, the pension funds, the unit trust guys, the clever money or the smart money. You and I, small private investors, make up about 10% of it. So this doesn't really tell you much where all the institutions moving the money. Yes, the price is dropping. Okay, yeah, the price spiked up, and 2 weeks ago we spoke about Japanese candlesticks, but we spoke about windows, but you can see how that window was closed very, very quickly. Okay, by looking just at the histogram, as I say, it doesn't tell you where the institutions are moving their money. Yes, the price is falling, but are they really selling? So that's where these two indicators are very, very useful, because it gives you a better visual description of what's happening regarding supply and demand, and obviously the institutionals. So the first indicator we want to look at is an indicator called on-balance volume, or OBV. So OBV is developed by was developed by a guy called Joseph Granville way back in 1963. So the point is, this is a classical, traditional indicator, been around for many, many years. It works. Okay. But anyway, Granville, he felt that volume was a driving force behind markets. So, you know, if you're optimistic about a company, you're going to buy as many shares as you can afford. So, and you'll tell your friends, and your friends will go buy more, and that creates a snowball. So that's where the volume leads the price. Okay. So he designed the on-balance volume indicator to help us project major moves in the markets. Okay. So that's what I'm saying, where the institutions are moving the money. You want to be on the coattails. And you and I, as small private investors, have one major advantage over the institutions. Because of their sheer weight of funds, they don't have the flexibility we have as small private investors. We can move in and out the market faster than they can. Okay, so you want to be, as I say, piggybacking on their trades. But anyway, on-balance volume is a momentum indicator that uses positive and negative volume flow. So obviously when money goes in and out the market, you want to be taking advantage of that. So it helps us predict changes in price. My philosophy, or the way I take a look at the market, price action is my primary indicators. But looking at on-balance volume and things like that, yes, it's confirming price action. And I'm using other things like oscillators, like RSI, stochastic. Those are secondary indicators. Okay. So on-balance volume confirms price action. So he looked at things like at volume as, number one, when it is increasing or decreasing, and also setting new highs and lows. He viewed it, or he described it as a spring, like a spring being tightly wound up, like in a clock. And eventually it's gonna unwind and release. That's energy. So that's how you can look at how you can view volume. When volume increases sharply, without a significant change in price, you can anticipate the price will follow. And that's what you're looking for. You want to see a price, the volume jumping up, and the price hasn't really moved, and you want to take advantage of that because the price will follow. On the other side of the coin, obviously, when volume falls without a significant change in price, eventually price will drop back. Okay, so volume always leads price. Okay, think about it that way. So on-balance volume is based on distinction between smart money, the institutions, and the less sophisticated retail investor. I call them the average Joe public. Okay, the smart money funds, when they start beginning to buy, obviously they're getting close to the bottom of the cycle. That's what I said, the hairdresser, everybody else is selling. If you remember my very first analogy I was talking about. But as obviously volume increases, the price remains relatively small. So they're accumulating the stocks as the small private investors is selling off. Okay, but eventually the volume starts picking up and the price will start moving up also. Okay, at that point, that's when the price has moved up. That's when the smart money starts getting out, and that's when average Joe begins to start buying again. But if you had to look at remember I said it's a mathematical formula. All it is, in very simple terms, there's three scenarios. If today's close is higher than yesterday's close, then today's volume is added to yesterday's volume. So let's say, for example, we start off with an arbitrary number of 100,000 or a million, whatever the case might be. If today's shares, we traded 10,000 shares and the price went up, we'll add those 10,000 shares to that 100,000. If the price falls, if today's close is lower than yesterday's close, and say, for example, we traded 5,000 shares today, we subtract that 5,000 shares from 110,000. Okay. So ultimately, you'll see in the next few slides how these all comes together visually. If today's close is equal to yesterday's close, obviously the on-balance volume will be exactly the same. So it's a very simple indicator, but very, very powerful. So remember, if today's volume is added to yesterday's volume, we talk about up volume and down volume. Okay. So here we go. Here we're looking at Cecil, and I'm trying to find some examples where we have these big spikes. And again, if I highlight the big spikes in conjunction with the price move, but just looking at it, that wasn't really a big move, okay? But what was interesting to note, if you had used the on-balance volume indicator, and what I've done here, and this is one thing I do suggest you guys do, is put a 10-day moving average on top of overlaid over your 10-day moving over your on-balance volume indicator. Because what you're looking for is sharp angles, that's sharp acute angles. That tells me that's where the clever money is getting in. So this is where they are accumulating. Slowly over a period of time, they're accumulating the shares, and eventually price catches up. But there we go. That movement there, that confirms that where the clever money is getting in. So that's where you would have got in, right over there. Okay. And obviously, on the other side of the coin, you're going to say, okay, that's another point I could have got in. And what I like to do is, like trend analysis, I use trend lines. I want to find a prominent low, connect to a second point, ideally a third point, and the more times it touches, the more reliable it is. So trend analysis applies to this indicator also. So yeah, we've got to change the trend. So this might be the start of volume distribution. So you can see the volume, on-balance volume indicator is moving sideways, but the price is still going up. So the institution is not really going wildly. They're sort of accumulating over a period of time. There's not really a big sell-off. Then we have a sell-off, yeah. Okay, you can see, you can also connect, whoops, so let me just go back again. We connect the lows together, so you can connect all the support levels together, and then we have a breakout. Number one below the support trend line, and number two below the moving average. That's a start of distribution. So that already got me out very, very close up top here. Okay, so that's how I've tried to bring the indicator to life for you guys. You can also bring in normal, whoops, sorry, go back. And also support trend lines. Yeah, you can see the trend line breaking through that support trend line, and obviously changing trend. But your moving average or your on-balance volume got you out a bit slowly, a bit earlier. Okay. Remember, as I said, you want to use other indicators or the oscillators to help you also determine if you're overbought, oversold. MACD would be great in a strong trending market like that. Let's move to the next example. Here's Remgro. Now you can see this really took advantage of this little trend here. So yeah, we had volume distribution, confirming this price action here. And yes, you could have drawn some resistance trend lines here, but you can see the moving averages crossing. So that would have been a bit of a change in trend. That was a confirmation. You see the volume over a period of time has been increasing. By just looking at the histogram, that really doesn't tell you much. Okay, so that would have been a good time when the moving averages crossed. Well, they didn't really cross, but they came very close together. But your on-balance volume gave you a good buy signal over there. Okay, that's accumulation, and it's stayed all the way, and there we had double crossover of the support trend line as well as the moving averages. So we got out quite close to the top, okay, before the rest of the market. So that would have been a great trade just on balance volume indicator. Okay. Here's Exara. I'm just showing you in a bear market, call it a bear market. This is Exara, obviously a resource stock. You can see it's trading way below 200-day moving averages. The trend is bearish. So that you could have had a bit of a rally there. You could have traded that rally within a bear trend. Slight volume accumulation, but long-term trend has been a sell-off. So the institutions are getting out of Exara. That's the way to look at it. Okay. So you can see there's not much of they look like they've sold off a lot already, and now we have a bit of a sideways market. So I think we're getting very close to the bottom soon, but obviously this would be a very highly speculative trade if you're going to get in right now. I like to see a breakout above that, and ideally a sharp changing trend. Okay, to help you start looking at Exala again. So you want to see a switch in focus from the institutions. Okay, so that's looking at on-balance volume. If we had a look at volume price trend, I like this indicator because it goes one step further. This shows you the true picture of supply and demand. So it consists also of a cumulative volume line, so sort of under 1,000. Okay, the big difference now is that we add and subtract a percentage in the change in the price change. Okay, so the bigger the price move, percentage-wise, obviously the more volume we add, and obviously vice versa. So it depends on the upward or downward movement. So now we just bring in price and percentage movement. So this helps us truly show us the balance between supply and demand. Okay, so it indicates the actual size of that supply and demand forces. Okay, so it's very similar. Sorry, let me go back there. Very similar to the on-balance volume. Okay, the only difference is now, remember, on-balance volume doesn't matter what happens to the close. We add it or subtract it. Okay, this is interpreted the same way. We just add more volume when price movement is bigger in a certain direction. Okay, so when prices go up, we add the volume. Obviously, when the prices fall, we subtract the volume. Depends on the price percentage move. Okay, so that's where the big difference comes in. Okay, so you can see the sharper angles. Okay, so yeah, we're looking at Anglo. So we have obviously a bear trend, and now the moving averages cross. That was our golden cross. Anything above that would have been bullish. However, we could have got a bit earlier. You see how the volume's been accumulating slowly. You could have drawn a little resistance trend line across here. That would have been a good time to buy. Your on-balance volume, so your volume price trend, would have got in a bit earlier. Okay, that sharp little change in trend. Okay, and then we have a top out there. So you could have got out of top there, take advantage of that price movement. So it's a great little trading tool. And from there we had a bit of distribution, confirming this price action, yeah. And you could have got in again over here. You can draw, we're eventually closing that window, you got in roughly about there. But it wasn't such a strong trade. You'll notice that, yes, we're making a higher high, but our indicator didn't confirm it. Okay, so that was a bit of a weak signal. If I had to draw a line from there to there, we'd be in a bit of divergence. And lo and behold, we had another downtrend. Then we made a new high again. We broke up above these highs, and you can see our accumulation again there. So I drew a support line across here. They have a breakout. There's a sell signal up top here, and since the market has dropped. You could have gone out a bit later, but I like to cross over the moving average as an early warning signal. So there's various ways to use it. The point I'm trying to make also is that using other normal traditional indicators like trend lines are very powerful in this form of analysis. Okay, here's Barclays Africa, the old APSA. So again, volume distribution. Okay, the institutions are getting out, the clever money is getting out. We had a sideways market, and here we got a double whammy. So we're broken up above resistance, and we're broken above a moving average. Very similar to what you saw over here. You could have seen this has got a bit of an inverse head and shoulders, bottom of the trend. When it broke out above it, there you'd have ran with it. Okay, your volume would have got you in a bit early. You can see increased volume over here as the prices are falling. Okay, your volume price trend indicator got you in a bit earlier. Okay, so you're getting quite close to that scenario there. You could have been a bit more conservative and waited. There's a bit of what they call a cup and handle. There's your cup, there's your handle, and they could obviously got in over there. Okay, again, usual moving averages. You could have sold out over here. Alternatively, you rolled it all up top here with your moving averages. That wouldn't have been too much of a bad trade. Okay. So very simple technical indicators, very powerful. Just understand the psychology behind it, the institutions, the clever money. As I say, use your 10-day moving averages, looking for the sharp angles. So there's Richmond. Again, look at that nice sharp angles there. Okay. Getting me very close to the bottom of the cycle. Yeah. There could have been a bit of a sell-off. Okay. Got me out over there a bit. Or I could have rode it all the way up top here if you wanted to. Okay, you can see a bit of a sideways market, and that's confirmed here. Hasn't really been a distribution, so yes, the price has fallen here. So eventually we broke through that support level, but it's been confirmed by the volume right top here. Okay, so this year would have been frustrating, going a bit sideways. Could have also traded in between, got you very close to the bottom of the cycle over here, and got you out at the top of the cycle. But since then, volume distribution, institutions are selling off. Okay, what I like to do is combine the two together. So here we look at British American Tobacco. Here I got on balance volume indicator and volume. I'm using Metastock in this scenario. Metastock refers to the indicator as price volume indicator. So plus volume trend rather. It's the same thing. What I liked is that confirmation. Both of them are giving you that buy signal, and both of you giving the sell signal. So I'll go in very close to the bottom of the cycle here. I'll go out very close to the top of the cycle. I even got out a bit earlier if you wanted to take advantage of this little cycle. But just using these two volume indicators helps you get your timing right. Okay. So since then, obviously, we had a bit of a sell-off. Sorry, go back here. And obviously, British American Tobacco has been forwarding. But maybe time to look at it again. Okay. So guys, I hope you found this interesting. I hope you can add it to your arsenal of indicators. Just quickly shoot off another poll here after doing this presentation. Let me just launch this one. Sorry, let me just launch my other poll here. Oops, I've lost it. What happened to it? Yeah. Lost my poll. Let me launch my other one. Okay, here we go. How many of you would now use, those of you that were considering just now the 40%, how many of you would start using it now? There we go. Most of you start using it. So I hope you've seen the benefits of it. Some of you still need some more help, more explanation. And that's obviously the whole idea of this webinar. So for you to go look at this, at the recording, go look at the presentation, go look at your own technical analysis. But obviously the percentage is much lower. Okay, so we've gone from 40% down to about 20%. Okay, 28%. Need some more help. So you guys are welcome to drop me an email if you need some help on those indicators. Great. Thank you very much for participating. Gives me an idea. Okay. So, guys, just quickly to summarize, before we wrap us all up, volume analysis, as I mentioned quite a few times, is a very, very powerful tool. However, it's overlooked by most technical analysts because we're looking for the holy grail. We ignore this volume analysis because we think it's too simple. Okay, but used correctly, it highlights for us the strength of the market or weakness of the market. So you're always looking for scenarios. Are we going to confirm price action, or are we going to look at a trend reversal? So volume does that very, very well. So traders ignore weak signals. We might use it when we have a weak signal. We might use it when it breaks through support to confirm that scenario when you're going to go short. But saying that, you know, these guidelines do not hold true in all situations, but they are generally a good trade in most trading decisions. Okay. So, you know, if there was a holy grail that works in every situation, I won't be sitting here. I'll be sitting on some island, maybe in the Cayman Islands or something like that, trading the market. So there's no holy grail. These are just tools to help you bend the odds in your favor. That's the way to look at it. Okay. So in conclusion, yes, I've been using Metastock charts, but you can use our Win Professional. It's exactly the same way if you guys are looking for some charting software. The software is for free. All you have to do is pay for the monthly subscription. I send you a CD. It takes 3 to 5 days, and you got it ready. But the whole idea remember about volume analysis, it leads price action, number one, and number two, it confirms price action. So those of you who do have technical analysis can look at these two indicators, can study them, and obviously use them to trade. Okay, so this PowerPoint presentation will be emailed to you as well as the recording. Look out for our upcoming events. We still got some webinars left for the year. Short notice, I know, but on Monday, we got Dr. David Paul from VectorVest South Africa come to talk to us again. He's a very, very popular speaker, and guys like him. The topic is such, how to determine that short-term and underlying trend of the JSE right now. So a lot of people confused, or not confused, but they're worried about where the market is. Is it too high? And this is what we're going to discuss. Next, and in the week after that, it'll be my last webinar from the JSE. That's the evening presentation. I'll be talking about my favorite subject, investment clubs. And then we have two more webinars here in November. We have a lot of people been asking about derivatives. So we have one on trading CFDs, another one talking about trading single stock futures. What are the costs involved, and examples how to trade them. And then our last session for the year with Dr. David Paul, I've asked him to come back again. These are on the Monday, by the way. It's the only time he can come. He's out here from the UK. But we'll be talking about finding stocks that are growing earnings aggressively and safely using the VectorVest software. Okay, that's just positioning ourselves ready for obviously January. And then those of you that couldn't make the investment club presentation at the beginning of November, I'm having a very similar one, just how to start investment club, the last one for the year. That'll be on the 12th of December before we all go on holiday. I've got two more Traders Forum meetings coming up next week Tuesday. I'm in Centurion. We'll be talking about the best and worst shares for the sectors and shares for 2014. What can we learn from what lessons can we learn? And obviously, we can also look at the winners. Okay. And then our last one for the year in Cape Town, I'll be looking at back over the year, but also forecasting or looking at opportunities for next year. Okay. So anyway, guys, that's my presentation for today. I hope you've enjoyed it. Thank you very much. From our side, remember, all these presentations, I do come with a disclaimer. Those shares weren't recommended as tips. They were used for educational purposes only. But here's my contact details if you guys want to get a hold of me. And thanks a lot for your support. And until next week, Monday, ciao for now. Enjoy the rest of your day. Bye for now. Bye.